Good evening, everybody. Good evening, my host. Can you hear me, my host?
Evening, Prof. We can hear you clearly.
Okay, thank you very much. Can you see my screen too?
And see your screen.
Okay. Although me, I cannot hear you clearly. The line is breaking. Thank God, but you can hear me. Okay, let's start the job of today. Disposal of an asset, subsidiary. The asset in this regard is what? Subsidiary.
Yes, I can see your screen.
Prof, I did not hear you. You can shout me. Your voice is not clear from here. I don't know whether you can hear me, but I'm not hearing you clearly. Thank you. Anyway, subsidiary can be acquired, as we all know. Then we'll consolidate a subsidiary that is acquired. The same way we acquire, subsidiary can also be sold. If it is sold, what is my own duty? Just like the same thing as acquisition, we consolidate. We still consolidate for the last time, even when it is sold. Disposal of subsidiary. Disposal of subsidiary is very, very important to understand the concept and what it means before we can go further in doing our job. When we say disposal of subsidiary, what does it really mean? What are we trying to say? Is connect one thing, that there's a loss of control on the part of the parents. The parent does not have control anymore. Picture to yourself somebody who has married and the person disposed, he has married, divorced, he does not have control over the person anymore. That is exactly what the standard is saying. But before we go into details, where does control start from? The date of acquisition, the date he has control. Control starts from 51%. When a parent acquires shares above 50%, it is said to be what? To have a control. The day you acquire more than 50% is the date of acquisition. The date he lost control, that means he sold his shares below 51%. It means there is a loss of control. When the share was sold below 51%, we said there's a loss of control. Please don't make the mistake by saying he has 70%, he sold 10%. That is not disposal of subsidiary. He has 80, he sold 20% out of the 80. He still has control. That is not disposal of subsidiary. It is called equity transaction. Transaction between parents and what? Subsidiary. The one we are saying, the one we are referring to is the one that control is loss. He has 70, he sold 40, meaning he has lost control. That is what we are saying. Technically, disposal of subsidiary can only come in two ways. It is either full disposal. He has 70%, he sold all the 70 entire holding. That is full disposal of subsidiary. The other one, he has 80, he sold 50% out of it. Per disposal, he still remains 30%. 30% is simple, is an associate. Is an associate. He has a significant influence. Associate, 30%. He has 70, he sold 60%. It becomes what? Simple investment. If it is simple investment, I can account for it in two ways. According to IFRS 9, financial instrument, it disposes equity, fair value through profit or loss, and fair value to other comprehensive income. That means he has 70, he sold 60%, 10%. If he sold it during the year, I will say, what is the value of the investment at the end of the year? I will now calculate the change either through fair value profit or loss or through fair value other comprehensive income to go to that component of equity. Any case, I will ask. But that is not the primary aim now. We are still going there. If it is an associate, after disposing, he has an associate, a significant influence, then no issue. We will apply IAS 28, equity method of accounting for associates. Now, if we dispose subsidiary, what is the effect on the consolidated financial statement? I will still call it consolidated. Don't forget, even though he has lost control, I will still mention it, saying it's a consolidated financial statement, even though he has lost control. That is the last time, unless he has another subsidiary, just like somebody who has divorced his wife. We will still refer to him as a married person. But whichever way, no issue. Let's take the effect. Effect, let's start from statement of financial position. The subsidiary we have disposed is no longer part of the consolidated even though attached to it. If it is only one subsidiary self, I will still call it consolidated financial statement, but I will not consolidate it. What do we mean? The liability, assets of the subsidiary disposed cannot enter the book again. The PPE is gone. The goodwill is no longer. The NCI, everything pertaining to what the subsidiary disposed in the statement of financial position will not enter the book. In the P or L, I will only consolidate up to the point I have control. I will only consolidate up to the point I have control. What do we really mean by that? If it disposes at the end of the year, that means I have control for 12 months, I will consolidate the 12 months. Revenue of the parents plus society will still be added together because it is 12 months at the end of the period, reporting period. Secondly, the subsidiary we dispose, we need to calculate gain or loss on disposal. If we dispose during the year, I will consolidate up to the point I have control. If we dispose at the end of August, I have control for 8 months, I will still consolidate by prorating, just the way you are doing for your during the year acquisition. It is the same thing. The only difference is that we are going to calculate gain or loss on disposal. And the gain or loss on disposal must come before the finance cost in the P or L. Either before or after the finance cost, you can bring your gain or loss on disposal. But if it is consolidated financial statement, SFP, I will credit retain any of the parents for the gain or loss on disposal. Okay? Okay. Having said that, the job of today, how do we calculate gain or loss on disposal? How do we calculate gain or loss on disposal? I have so many questions on that. Also, Eric Hidwaya, Rocky, Snooker, Paston, Thomas. Okay. I have a question on that, which I will show you how to calculate gain or loss on disposal. Now, what is the formula to calculate gain or loss on disposal? You might decide to involve NCI in your calculation. You might involve NCI in your calculation. You might also decide otherwise. I will show you the two methods of calculating that. Then you cannot choose your own. But I would like you to know the two methods. But some questions, you can only apply one of the two methods to solve it, not the two. That's why I will emphasize, please understand the principles, know the two methods. in case one is not going your way, the other will go your way. But most of the questions you will see, they will, majority of them, the two of them can solve. But it's a real situation. I will show you the real situation. Okay. Formula to calculate gain or loss on disposal. The formula to calculate gain or loss on disposal. Sales proceed. In exam, you don't need to put gain or loss on disposal involving NCR. No. You always say gain or loss on disposal. I just want to differentiate between the two for you. Gain or loss on disposal without involving NCR and gain or loss on disposal involving NCR. I just want to differentiate so that you can see. But in the exam, please don't write gain or loss on disposal involving NCR. You only write gain or loss on disposal. I need sales proceed, which the question will give to me. So they tell me that, what do you mean by sales proceed? How much is sold the subsidiary? The question will give it to you. If you sell it all, it will tell you. The fair value of the remaining investment, in case it is part disposal, he did not sell all. He has 60%. He sold 20%. Fair value of the remaining investment, that is the 40%, the question will supply to you. They don't calculate it. The question will supply it to you. They don't calculate it. Addition of the two will give you total consideration. Addition of the two. Net asset disposed. I will now look at the net asset disposed. Goodwill is gone. Net asset DOD and NCI value at DOD. If this is greater than this, like this question, to give me loss. And if it is loss, I will debit retain any of the parents. If it is gain, I will credit retain any of the parents. I will take it from the simplest part. Then we'll move to the one that is higher, involving impairments, all those things. But don't forget, we have said the goodwill gotten using fair value, that means NCR is value at fair value, belongs to both the parent and NCR. The goodwill getting using share proportionate belongs to parents only. And I told you that the goodwill of the parents, even in fair value, it is share proportionate. The goodwill of the parents, even in fair value, it is share of proportionate. Get the scope. Okay. Let's take a working example. Before we go to working example, is there any question you want me to attend to? Let's take it for the simplest one. Then we aggravate it. Is there anyone you want me to attend to? Question number 5, Rocky. Is there any question? Is there any question that you need clarify on it? Okay. No issue. Okay, no issue. Let's take. Oh, there one person has dropped question. Let's see. Okay, Rabia. Thank you, my sister. This is what I'm saying, ma. The Sarah said any goodwill gotten using fair value. That means NCI is measured at fair value. The goodwill belongs to both the parent and the NCI. But when we use share proportionate, it belongs to who? Parents only. Parents only. Look at it. What is this? What we are saying it is. He now say even in fair value, the goodwill of the parent is sure proportionate. Why? Anything, any asset the parent acquire, any amount he paid above the net asset he acquired is his goodwill, which it is the goodwill in both methods. In fair value, the goodwill of the parent is share proportionate, even in fair value. The only difference that was there in the only difference is that NCI goodwill is in fair value. In share proportionate, no goodwill attributed to NCI unless for impairment testing purposes, where you will get your notional goodwill. Leave that aside. That is the next after this question, after this disposal. Purchase of other interest and still retain control. He has 70, he bought 20. He has 80, he sold 20, he still has 60 left. Those type of transaction is called equity transaction. Transaction between parent and NCI, the owners of the company. But you will see the application of what I'm saying now. When we get here, when we get to this question, we will see. So that to also clarify your question very well. Let's take question 5. Rocky has earned 70% in Ricky for 2 years. Rocky is the parent. The group structure is 70-30. Rocky is disposing of this investment. He's selling them all the investments. Don't in disposal. Only thing that is of interest to the parents, he needs cash. That is why you cannot have share consideration, you cannot have different consideration, you cannot have that kind of consideration. It is only cash because he's in financial difficulties. That is why he is selling his share. Okay, no issue. What will I do? This is what I will do. They've given me the group structure 70-30. I need goodwill. They say goodwill is calculated using full good method. No goodwill has been impaired. Let's start from the simple, no impairment yet. Okay. The details are solid. Cost of investment for the goodwill calculation. Ricky fair value of the net asset at date of acquisition 19. Ricky fair value of the non-controlling interest NCI, which is at fair value 800. Sales proceeds 3,000. Ricky net asset at disposal 24. He has given me the net asset at DOD 24. The now said required. Calculate the profit or loss on disposal. You have to calculate profit or loss on disposal. Good for me. No issue. He said A, to Rocky individual accounts. That means to the parent accounts only. B, in the consolidated accounts. To individual account of the parents, It's very simple. It's just the sales proceed. Sales proceed is collected 3,000 minus the cost of investment 2,000. That is that. Look at it. To the parents, sales proceed 3,000. Cost of investment 2,000. Gain on disposal. This is to the parents. He has 70%. NCI is 30%. I need goodwill at the date of disposal. There is no impairment, only the goodwill at date of acquisition still remain at DOD. Cost of investment 2,000. Add NCI at fair value 800, giving me 2,800. Net asset at date of acquisition 19. The goodwill 900 belongs to both the parent and the NCI. Who can give me the goodwill of the parents? Because this goodwill belongs to both the parent and NCI. Who can tell me what is the goodwill of the parent in this 900 and that of the NCI in this 900? Who can do that for me? Good. How do you get your 630? How do you get your 630? NCI 270. Please enlighten me. Olabi says 70% of 900. Good. 70% of 900. Okay, 70% of 900 will give us 630. My brother, I love in Spanish. Anybody that do this in exam is compactness diet too. Compactness diet is compactness year. Because no more exam this diet. And you must qualify this diet. Especially for those of you who are waiting to qualify. So now it's not for the parents. The 900 is not for the parents. We said the goodwill of the parents even in fair value. Apply share of proportionate. What do we get if you apply share proportionate on this question? What will you get if you apply share proportionate? That means the cost of investment, 2,000. Add NCI, 30% of the net asset at date of acquisition, 19. Add it to the cost of investment, which is 2,000. So give you purchase consideration and less 19. What does it give you? Cost of investment 2,000. 30% add NCI. 30% of 19. Use share proportionate. What does it give you when you use share proportionate in this question? Share proportionate. Don't forget the shorter method of share proportionate. Cost of investment 2,000. Remove 70% of 19. 70% of 19. Somebody else. Good. Thank you. 2,000 minus 0.7 that's 19. What does it give you, man? What does it give you? That is the cost. That is the what you are doing. Good. That is the goodwill of the parents. Not 70% over times 30, 900. It's not based on the percentage. Okay. Thank you. No issue. Let me clarify it. Thank you. Goodwill of the parents is 670. Yes. You see, we said the goodwill of the parents, even if fair value is share proportionate. If I don't know that, I cannot do the second method. That is why. Now, look at it. How much was he collected? How much for the B part? He collect 3,000. He sold up. Fair value of the remaining investment is dash. Net asset disposed, not acquire. Net asset disposed. Goodwill, 900. Net asset at DOD, which the question has given me. Look at it here. Net asset at DOD, it was given in the question 2-4. NCI value at DOD, how do we get it? This is it. NCI value at DOD. Date of acquisition, 800. Share of post, 24 minus 19 times 0.3, 150. How do we share post? DOD minus DOA times NCI percentage. The post, 150. 150 plus 800, 950. That's why you see 950 here. Alternative method, NCI percentage of the net assets at DOD, 0.3 times 24, 720. What is the goodwill attributed to NCI? Because it is fair value. The goodwill attribute, I can get the NCI first. I can decide to get the parent. If I want to get the parent, it's sure proportionate. Look at it. Goodwill attributed to NCI. NCI at fair value at date of acquisition, 800. NCI percentage of the net asset at DOA, 0.3 times 19, 570. 800 minus 230 minus 570 will give me 230. If you add the 230 here, it will give you 950. That is 950 we subtract here. After subtracting everything, you have 2350. 3,000 minus 2350, what does it give us? Because this place is greater than this, it will give me what? Gain on disposal, which is 650. Do I involve NCI in the calculation? Yes. NCI value at DOD, 950. I have involved NCI in the calculation. I have involved NCI in the calculation. If I don't want to involve NCI, look at it. Gain or loss on disposal without involving NCI. You will not see this NCI we are seeing here. You do not need NCI value at DOD. Look at the way. Gain or loss on disposal without involving NCI. Sales proceed, the cash proceed, 3,000. Fair value of the remaining investment, nothing. Total consideration, 3,000. The goodwill of the parent will only come here. I don't want to involve NCI. I will only take the goodwill of the parent at the date of disposal, which is 900 minus 230, or I use share proportionate to get the 670 direct. Then what is the net asset disposed, not DOA? The net asset disposed, typing error, DOD. You only sold 70% of its net asset. It's 0.7 times 24. We give it 1680. You now add it to the 670. to give you 2350. This is the net asset disposed. 3,000 minus 2350. We will still give you gain on disposal of 650. I did not understand. Even understand is not even understanding me. Talk. I did not understand. Even understanding is not understanding me. Any question? Okay. Let's go back. How do we calculate gain or loss on disposal? Please write the formula to calculate gain or loss on disposal. Let me go back to the question. This is how disposal used to be. Because you are not used to disposal, you are only used to what? Acquisition and consolidation, DOC, date of disposal, okay? Now DOD. Now look at the question. This is what the question is saying. How do we calculate gain or loss on disposal? Sales proceed. The sales proceed. They will give you the question, how much is sold? What do we mean by disposal? Loss of control by the parent. Where does control start from? Control start from 51% and above. Anything below that, it is loss of control. That is disposal of subsidiary. And I told you, it can only happen in two ways. If you listen to me at the beginning of this class, I said it is either full disposal, like this question. Rocky has 70 investment in Rocky for 2 years. Rocky disposed of this investment. He sold everything, full disposal. Nothing is left. Just like a married man that disposed the wife alongside the children. Full disposal. Loss of control. Doesn't have control anymore. Don't forget, control starts from 51%. Anything short of that, the loss of disposal. It's a loss of control, disposal of subsidiary. I said there is also part disposal. What do we mean by part disposal? He sold part of its shares and lost control. He has 70, he sold 40. He remained 30. 30 is an associate. What is that? Part disposal. In part. Control is lost. Let me show you. I think I have a question like that here. Let me show you. Thomas. Thomas disposed 25% holding in Pierce on 30 June 2000 for 125. A 70% holding in Pierce has acquired 5 years period to this. This is part disposal. he sold 25%, he has lost control because control starts from 51% above. They will give you the fair value of the, look at it, fair value of the remaining 45% hold on 30 June 2006 was 245,000. They will give you the fair value of the remaining investment. That is part disposal. They will tell you that you are sold, but it remain so. They don't calculate the fair value of the remaining investment in any question. The question will give it to you. Now, it can also sell and become a simple investment. After selling the shares in the subsidiary, it becomes a simple investment. It does not have subsidiary again. He has 70, he sold 60. It's a part disposal. Part disposal. What do we do to part disposal? He has lost control. The 10% is a simple investment. They will give me the fair value of that 10%. Get the logic. There is two methods of doing this in exam because you cannot balance the account if you don't calculate gain or loss on disposal. So in any way I'm lecturing, I always deal with gain or loss on disposal separately for better understanding. I don't lump it with the full question. I will deal with that. Then after you have understood gain or loss on disposal, how to calculate it and where to post it, we will now go to the next line of action, a complete financial statement, where I will now apply this knowledge to calculate gain or loss on disposal on a complete financial statement, just like SOPI Limited. That is what I'm saying. Now, let me now give you the formula to calculate gain or loss on disposal. It is two ways, but in your exam, you only say gain or loss on disposal or calculation of gain or loss on disposal. You cannot say calculate gain or loss on disposal involving SCR without involving SCR. You cannot say so. You can only pick one. In short, the first one which I show you, it is what is in your ICANN pack. You go to ICANN pack, that is what you will see. The second one, if you are used to foreign author, short, if you go to Kaplan, you will see it there, live and direct. All those foreign, so many of your foreign author, they apply the second method. They believe you understood the process of saying this is fair value. Okay, let's go to the formula now. Sales proceed. How much do I collected from selling the subsidiary? Some question will say cash proceed, the same thing. Or any English who can indicate to you it says proceed, any English. Look at this. Any English that can tell me that says proceed. Thomas disposed 25% hold in PS on Thursday for 125,000. What is this 125,000? Says proceed. The question will tell me. Says proceed. Now, if it remain, I will now add the value of the remaining investment, which you will not calculate. The question will supply to you fair value of the remaining investment. After adding, You get total consideration. Net asset disposed, goodwill. How do we need goodwill? There must be acquisition first before you can dispose. There must be acquisition before disposal. That's why we have date of acquisition, date of disposal. Next. Having said that, I will calculate goodwill normal way. But the problem is you must understood when goodwill gotten using fair value, what is the implication in my calculation? Share proportionate. What is the implication in any calculation? In short, that must be registered in your head, in your mind, in every way you want to put it. It is even useful in cash flow in so many questions. The goodwill that is gone, if it has impaired before the date of disposal, the question will tell us. Then the net asset disposed. NCI value at DOD. I will now remove the value of NCI. That is what I'm referring to, disposal of subsidiary. Now let's go to the question again and the solution. Don't forget, cost of investment, 2,000. Fair value of the net asset at acquisition, 19. Fair value of the non-controlling interest, 800. Sales proceed, how much you collected. Net asset at DOD at disposal, 24. The asset calculates profit or loss on disposal in ROCE individual accounts, in consolidated accounts. That's it. Now, digest the question. Let's go to the solution. Data of the question. Group structure, parent is 70, NCI is 30. Cost of investment, 2,000. Sales proceeds, 3,000. Net asset at date of acquisition, 19. Net asset at disposal, 24. Fair value of NCI at the date of acquisition, 800. Can I calculate my goodwill? Yes. Cost of investment, 2,000. Add NCI, 800. 28. Net asset at date of acquisition, 19. Goodwill, 900. Because it is fair value, this goodwill belongs to both the parent and NCI. Now the question I say, where in the parent's account, parent individual account, that one is not added unless tax is involved. I will tell you. Sales proceeds, 3,000. Cost of investment, 2,000. Gain on disposal, 1,000. This is to the individual account of the parent account. So the group now, this is how they calculate gain or loss to the group B based on the formula I've given you. Sales proceeds, 3,000. Fair value of the remaining investment, nothing. Make it 3,000. Net asset acquired, goodwill. At the date of acquisition, there was no impairment. So at the date of disposal, the goodwill still remain 900. NCI value at DOD. NCI at the date of acquisition is 800. At DOD now, we need that. Because they're giving me NCI value at DOD. Net asset at DOD is 24. How do I get this 950? Two ways. First one, NCI at DOD. NCI at date of acquisition, 800. Share of post acquisition profit, 24 minus 19 times 0.3. That is 950. Alternatively, NCI percentage of the net assets at DOD. Then goodwill attributed to NCI to that. You sum it up to give you 950. How do I get goodwill attributed to NCI? How do I get this? NCI at fair value, this acquisition, 800. NCI net asset date of acquisition, because goodwill happen at date of acquisition, 0.3 times what? 19. To give me 570. The difference will give me 230. This is the goodwill attributed to NCI. 230. I will now add it to the net asset at DOC, at DOD, 720 to give me 950. Thank you, my brother. You are getting it. Okay. Okay, Mrs. Adenike, I understand what you are saying. Thank you for that explanation. That it will be best. You will decide what you are saying. We will show you. It is your own duty. What is the best for some people is not best for another person. But for sheer proportion that you have said, I agree with you with your statement completely, no doubt. But the problem is this: let each one of us understand the process and decide. It is your own research. That's okay. If it is share proportionate, it will be easy. We have not even done share proportionate at all. You will now decide. So that is how we get the good. That is how we get the 950. I will now supply the 950. The goodwill now that belongs to both the parent and NCI. Net asset DOD belongs to both the parent and NCI. NCI value at DOD is 950. This is the net asset disposed to 350. 3,000 minus this will give us what? 650. Then, as you have said, without involving NCI, sales proceed 3,000. Fair value of the remaining investment Total consideration 3,000. The net asset disposed, the goodwill belongs to the parent and NCI. I will take the parent portion because I'm coming from the parent angle, which is now 100 minus 230. Net asset at DOA, at DOD, because we are talking about disposal at DOD, not DOA, typing error. 0.7 times 24168. We add it together to give you this. The same thing in the first one. Then I'll ask us to give you 650. Now look, my brothers and sisters. Look at it. The same formula. The two formulas are the same technically. I sold 3,000 of my assets. The goodwill, this 3,000 is at 70% because I only sold the 70% investment. This goodwill belongs to both the parent and NCI. The net asset belongs to both the parent and NCI. If I now remove parent portion and NCI portion from this, because this is at 100%, if I remove 30% from here, it will give me 350. Because this is 70% of the asset disposed, 70%. Just remove it. Gain or loss on disposal without involving NCI. Sales proceeds 3,000. Fair value no. Don't rebate. Net asset disposed, goodwill now 100 minus 670. Net asset at DOD, you only show 70% of 2.4. Addition of the two will still give me 2,350. I will now minus 3,000 minus 2 to give me what? 650. That is that. Any issue? Any issue? Any issue? Ask me a question. Ask me a question. How do you get your 270? Madam? I have addressed this question. Today, you are still using, it is not based on the percentage. It is not based on percentage. Madam, it's not based, this is the formula. Please apply to the formula. Goodwill attributed to NCI. NCI fair value 800. NCI percentage on net assets at the date of acquisition. This is the goodwill attributed to NCI. And if you use share proportionate, you can get the parent role and subtract it from the total goodwill to get the NCI. How do we get the parent role? It's not based on percentage, man. It's based on share of proportionate. Please get the logic. Don't multiply. If you use share of proportionate, you will get 670. The parent own. Subtract it from the 900. It will give me one. Please, don't do this. This is a complete error. The standard does not say so. Let's take another question. Snooker purchased 80% shares in Billard for 100,000. For 100,000. For 100,000. When the net asset of Billard had a fair value of 50,000. Had a fair value of 50,000. So they've given me the group structure 80-20. Billard 100,000. When the net asset of Billard had a fair value 50,000. Goodwill was calculated using proportionate method, amounting to 60,000. They've calculated the goodwill for us. They say it was using share proportionate. That means the goodwill belongs to who? Parents only. I has not been impaired to date. Snooker has just disposed of the entire shareholding in Billard for 300,000. Sales proceeds. When the net asset was stated at 110, tax payable by Snooker at 30% on any gain or loss on disposal of shares. Okay, that is what the question says. You give us the tax rate. Group structure, 80. Cost of investment, 100,000. Net assets, goodwill, share proportionate. Net asset DOD 110. Cost of investment. RNCI, purchase consideration. Net asset date of acquisition, goodwill 60. They told me they calculated goodwill. The question is if you give me goodwill 60. Then alternative method. Look at the alternative. The parent only bought 80% of the net asset, which is 50. Then the cost of investment, 100. 80% of 50,000. But so the goodwill is 60,000 naira. The goodwill using share proportionate belongs to parents only. Parent individual accounts, sales proceeds, which have given me the question, minus cost of investment, 100,000. It's now giving 200, less 30% tax. Get the logic. Tax rate, 30% of the gain. Gain on disposal after tax, 140. Sales proceed, 300,000. Fair value of the reinvestment, none, 300. Total consideration, net assets acquired, 60,000. Net asset disposed, the goodwill, 60,000. Net asset at DOD, 110. I will remove NCI value at DOD. Date of acquisition. Share of post. Alternative method. NCI or NCI percentage of the net assets. Yes. We are not consolidate. We only apply the tax. We are coming there, you will see it. We are not consolidate the one of the parents. It is an individual account. But the tax element will be taken to the group. That is why they don't give it as waka pass, unless the question has to calculate. But if we give it as, it will not ask you to calculate. You must calculate because the tax element, this is what I'm saying. I will debit retain any. This tax element 60. I will debit retain any of the parents minus 60,000. In the consolidated effect of consolidation, I will not credit tax account to increase the tax. So take note of that. NCI value at DOD. NCI date of acquisition 10,000. Share of post 12,000. Make it how much? 22,000. Alternative method. NCI percentage of the net asset at DOD. No goodwill attributed to NCI. 0.2 times 110. You give me 22,000. Or NCI percentage on the net asset at DOD is 0.2 times 22,000. Or you get your date of acquisition, you share the post. If I don't want to involve NCI, sales proceed 3,000. Fair value of the base, no. Net asset disposed, goodwill 60,000. If the owner of the goodwill, net asset at DOD, you only sold 80%. 0.8 times 11,008 plus 60,000 to give me 148. Then I will let the 300,000 to give 152. Any issue? Ask question, please. Ask question, please. Ask your question. Oh yeah, I want to ask you, class, out of the two methods, as Madam Adenike has suggested, which one do you prefer? Please, in exam, don't write gain or loss on disposal involving NCI. Not involving, there's nothing like that. We are just distinguish it here for clarity purposes of understanding. You are the one going to decide, as he has said, he saw it. If it is short proportionate, I will use not involving it without involving NCI. If it is fair value, I will use That is for her. Look at the two methods. Which one do you prefer? Which method do you prefer? Which of the methods do you go with? But I want you to see what okay. I want you to see what she said. What Madam Denike said. She said, oh, this is not the answer I'm expecting. I think I still like the last answer. No preface. I can use any of them. If it is fair value in exam, if it is fair value, I would prefer you use this because this is the reason. There is no need of you splitting the goodwill. If it is fair value, the goodwill belongs to both the parent and NCI. No need, just leave the goodwill at 100% for both of them. Then the net asset for both of them, go and look for only this one is your problem. If it is fair value. But if it is short proportionate, I'll prefer this. This one is okay. The goodwill belongs to parent only. 80% of the net asset, I will just multiply. That's only what I would do. That is what I want expect you to say. Oh, that if it is fair value, I'll go with the other one. If it is short proportionate, I'll go with the second one. Okay, next one, impairment is involved. Person purchased 80% of shares in Mary 4 years ago for 100,000. On 30 June, sold all its holding for 350, and the net asset of Mary at acquisition was 69, and at disposal was 88. 50% of the good acquisition has been written off in the earlier year. So what is remaining at disposal, we will get to know. The fair value of the non-controlling interest assessment at this option was 15,000. It is the good policy to value non-controlling interest using full goodwill method, and tax is charged at 30%. There's no need to bother ourselves with the parents, because you all know it just says proceed minus the cost of investment times the tax. Praise there is a tax to give me my profit on the sales of subsidiary, because I must calculate capital gain tax. Okay. Oh yeah. Let's go to the question, the solution. Group structure is 80-20. Cost of investment 100. Net assets 69. Net asset DOD 88. NCI value 30%. I need goodwill calculation. Cost of investment 100,000. Add NCI 15. Net asset deal acquisition 46. Impairment 0.5. There's 50% has been impaired. That's 26, 23. Goodwill is just what? Goodwill at DOD 23. Gain or loss on disposal involving NCI. Sales proceeds 250. Fair value of the remaining investments. Net asset at DOD. NCI value at DOD. I want to get the NCI DOD, date of acquisition, share profits, share post, DOD minus 0.8 percentage, impairment, total, alternative, NCI percentage of the net asset at DOD, goodwill attributed to NCI, 1-2, minus impairment, you still give me the same thing. How do we get the goodwill attributed to NCI? And gain or loss on disposal without involving NCI. The goodwill belongs to both the parent and NCI. Sales proceed 250. Fair value of the remaining investment dash. Total considerations. The goodwill of the parent 26,400. Net asset disposed. How do we get 26,400? Goodwill of the parent. Cost of investment 8,522. Alternative method. Goodwill of the parent. I remove the parent portion for of the cost of the net asset date of acquisition to give me 4,800. Impairment. So this is the goodwill to be reported, 26,400. 26,400 plus 7,400, 96,800. We still give you the same thing, 15,300. Any question for me? Any issue? Ask your question. Ask question. In the question, they said the question says, the question was very clear. 50% of the goodwill arising on acquisition has been written off in the earlier year. 50%. So the goodwill at this DOD. Any other question? Okay. Any other question? Okay. On January, Ebuka purchased 80% interest in Dorothy for 40 million on January 2006. When the fair value of identifiable net assets was 44. Okay. On January 2006, when the fair value of the identifiable net assets was 44 million, the net asset as well, when he acquired 80% interest granted for 4 million, cost of investment 4 million. Partial goodwill method has been used to calculate goodwill. An impairment of 2 million had been risen in the year ended 31st December 2006. There is impairment of 2 million. Holding in Dorothy was sold for 50 million on 31st. The carry amount of Dorothy identifiable net assets other than the goodwill was 60 million at the date of the sales. Ebuka carrying the investment in Dorothy at cost. The finance director calculated that the gain arose of 2 million on the sales of Dorothy in the group financial statement, being the sales proceed of 50 million, less 48 million of their shares of identifiable net assets at the date of sales, 80% of 60 million, because the net asset at that day was what? 60 million. And they get what? They only acquired 80% before. So they lost 80% and they paid them sales proceeds of 50 million. So he said they made a gain. This was credited with earning. A fair gain or loss could have been calculated with a suitable calculation. Now, what he has done is wrong. The standard does not say so. Maybe the gain is even more than that, or it's a loss. If it's a loss, I reverse what has been posted in the retained earning. I will debit that account straight for the loss. Carry my POS back, Baza. I will reverse the entry. Carry my POS back for the loss. Then debit Credit might retain any, no doubt. I will reverse it as debit and credit. Now let's go to the solution. Okay, you acquire 80%, NCI is 20%. Net asset date of acquisition was 44, impairment of 2 million, sales proceed was 50 million, net asset at disposal, goodwill at DOD, NCI value at DOD, cost of investment, 40. Calculation of the goodwill, cost of investment, add NCI, at date of acquisition, he has what? 44. 0.2 times 44, 8.8 to give 48.8. Net asset date of acquisition is 44, 48.8 minus 44, 4.8. The goodwill at date of acquisition is 4.8. Impairment of 2 million, giving me 2.8. NCI value at DOD, DOA 8.0, share post. A minute, please. A minute, please. I'm very busy. A minute, please. Sorry for the break in transmission. So, because there is no goodwill attributed to NCI, I can just multiply 0.2 times 60,000 to give me 12 million. To still give me the same thing. Just know that there is no goodwill attributed to NCI. NCI will only pertain in what? The net asset, either DOA. The same way you have gotten NCI date of acquisition, 0.2 is the same way when it is sure proportionate. Just multiply, if you need DOC, multiply the percentage of the DOC. If you need DOA, multiply the percentage of the DOA. If you need DOD, multiply the percentage of the DOD, because there is no goodwill attributed to NCI. That is what the standard said. He said, unless for impairment testing purposes. Unless for the impairment testing purposes. So, having done that, I can now calculate my gain or loss. This is the two. Sales proceed 50, sold off. Total consideration. Net asset disposed, the goodwill at DOD 2.8. Net asset at DOD 60. I've gotten my NCI value at DOD 12. Minus it from it, give me what? This one is greater than this. It's a loss on disposal of 0.8. And the man has what? Credit retaining with 2 million. I must reverse the entry. Sales proceed. $50 million. Fair value of the remaining investment. I don't want to involve NCI. Goodwill at DOD 2.8. Net asset at DOD is 0.8 and 60. That's all. To give me loss on disposal. Then the next thing. What do I do? In case something is reported in other comprehensive income, get the scope. When things are reported in other comprehensive income, like we saw question, if they report in other comprehensive income, it must be part of the what? Sales proceed. That's what the standard says. On June 30, we saw at acquired 100% interest in Negi, a public company for cash consideration of 39 million. Negi has net asset we have fair value at what? 32 million. On November, Verent disposed 60% of equity in Negi when the identifiable net asset was 36 million. Of this increase in the net asset of 3 million had been reported in profit or loss, and 1 million had been reported in the comprehensive income as profit on the available for sales assets. Out of this, 1 million has been reported in OCI. If they say they reported it in OCI, my brothers and sisters, let it join what your sales proceed. Add it to the sales proceed immediately. They've not touched disposal question before, except this gain or loss on disposal in one of the diets. I have forgotten the diet. They've tested gain or loss on disposal. Aside that, so let's see. Also question. You acquire 100% no NCI. Cost of investment, net asset acquisition, OCI, net as DOC, sales proceed. Fair value of the remaining investment they've given me. Cost of investment. Add NCI, no. 39. Net asset date of acquisition, goodwill on DOA. NCI value at DOD, no NCI, because he acquired 100%. Sales proceed, 23. Fair value of the remaining investment, 13. Gain on reported OCI, 1. I will add it, make it 37. Net asset disposed, goodwill is gone, 7. Net asset DOD, 36. You now give me what? 43. 43 and 7, loss on disposal of what? 6. Which will be debited to the retainer of the parent. That is that. On that note, you can look at the remaining, and I think the question is clear. Any question? Any question? You can take the remaining one. Yes. Question 9, SOPI Limited. SOPI Limited. When I give me the question in examination hall, I need to test what type of investment you have in my hand. But the question has made it clear. SOPI Company Limited company acquired 2 subsidiaries. He acquired 2 subsidiaries companies. 2 subsidiary companies. Okotoyi and Gbebodi. This is what he acquired. No issue. Then I will now ask the question, is there anyone? I will open everything. If I open everything, I will close everything. Because I must look inside the question, is there any possible disposal? So if I need go, on 31st October 25, after accounting for the result of impairment test, SOPI sold 100 million shares in Gbebodi for 180. I will ask myself, does he still retain control when he said 100 million shares? Does he have, how many does he have when he sold 100? Or what is the percentage of the shares sold against the total percentage he has, so that we can get? It's very simple. I will determine what type of investment you have in my hand. First, he acquired 200 out of how many? Out of 250, with the nominal value of 1 naira, I will convert the total value of shares in subsidiary equal to values of shares of nominal value. If I convert it, you give me what? 250. You acquire 200 over 250. That will give me 80% control. For the Gbebodi, 500. You acquire 300. You only possess 300 by 500 times 100. That is that. %. How many shares does this? I will now ask. How many shares does it dispose? He sold 100 million out of the 300. 300 minus 100 million over what? The 500 shares in total. That will give me 40,000, 40%. Or what is the percentage of the share loss disposed? 100 over 500 times 100, it will give me 20%. He has 60% before, minus 20%, making 40%. That is all. Because of our time, we will not be able to take this question this night. But if you look at the requirements, it says calculate first gain or loss that will have been recorded in the group financial statement on the sales of the shares in Gbebody. In exam, you will leave blank page for the first one. There is no way you can calculate this gain or loss without doing all the working of the goodwill, everything first. So you will leave the blank space, or you write the formula out. From the answer, you write the formula out and go to the B part of the question to go and consolidate where you are going to open gain or loss on disposal. After you are finished, you will now copy and paste to the blank space. They used to waste somebody's time. There is no way you can calculate gain or loss on disposal if you don't open all the necessary accounts down and do the posting. After you calculate gain or loss on the question, then you now come here to paste it. That is it. So before we call it a day, any question for me? Any question for me? Any question for me? Okay. Thank you very much. On Wednesday, on Thursday, we are going to start. We will finish the question. We will take the POL, then go to purchase of further interest and dispose of interest, equity transaction, followed by cash flow. Followed by cash flow. So have a wonderful night. See you by God's grace on Thursday in good health. Have a wonderful night rest. Thank you. My host.
Sir?
Okay, you can end the class, please.